Good weekend, all. Ira Epstein of Linn Associates with your metal market wrap-up. And this wrap-up's going to be your weekly edition. So we're going to do things a little different. We're going to look at a monthly chart and then weekly charts. And today is October 1st, 2021. Now, if you like what I do, do me a favor. Thumb up. If you don't like what I do, cut off your thumb and give me nothing. Okay. The farce continues in Washington. Now there's nothing. Okay, the progressives have what? They've lost and they've won all at the same time. That $3.5 trillion bill, I almost wanted to say billion again, that's out the window. President Biden told you that when he walked out of the meeting at Capitol Hill today, and he said, well, it could be 6 days, it could be 6 weeks, it's not going to be 3.5, maybe it's going to be 2 trillion. That's out the window. Well, if that's out the window, how aggravated are the progressives going to be? Because that means a lot of their social programs are not going to happen. I wouldn't call that a compromise. I would say that they're losing the battle, and if they unite over the weekend, why do anything? Why do anything going forward? Is that a good thing or a bad thing for the markets? Let's talk about that for a minute, then we'll get into the charts. No plan means we're not spending upwards of $4.5 trillion. No infrastructure, I get it, which I think is a good plan, but we're not spending that other money, the $3.5 trillion. Means no increase in taxes potentially. I see that. I saw Larry Summers today all over Bloomberg trying to tell people that the corporations can afford the 25%. They should do it, dismantle everything under Trump. Okay, that's his nature. Understand the man. You'll see him over the weekend on the Wall Street week as they do that. So where does that put the metals? Well, first off, I am not convinced gold is really the representative of inflation. I think more likely it is Bitcoin. Don't ask me why. I can't explain it to you. It's just that a younger generation has moved away from it. With all the inflation talk, with energy prices soaring, nearly $80 a barrel in Brent, gold's up $1 today. This is up $4,700. It loses a lot more too. I get it, but I'm just pointing out what I see. This is your inflation story, and there's nothing to stop it if the world's going to get better right now. Because green, G-R-E-E-N, means we're not going to produce that. We're not going to use it as much in America. We're on a 20-year path to get rid of fossil fuel wherever and whenever we can. I get it. This is the pain you're going to feel along with it. So you get inflationary prices there. You're going to see a certain amount of pass-on of those prices. How could you not? If you're a retailer, you can't eat all the loss. You'll absorb as much as you can. You can't do it. But why aren't the metals coming alive? What did come alive today for a change is the copper. But keeping copper down that much or up that much, your day-to-day whims is what it's about in China. And in China, again, in my full research today, I wrote what the vice premier of China did. He was given his papers to go tell people in China, the producers, I don't care if it's dirty coal. Produce it. Produce all you can. I don't care what you're telling me about nat gas and this. We're not shutting down our factories. I'm not saying that's a bad thing. I'm just saying that's what he told them. They're going to do what they got to do, and the hell with America's green agenda, Europe's green. They'll do what's best for them. And at the end of the day, that's what communism does. What's best for them. Okay, so let's go to the metals and see why we have these problems. First off, you have a narrowing in pattern. You've got lower highs in an attempt at higher lows. Momentum has been pointing down. And for weeks on end, I want to tell you 2 months worth. You keep hitting each week the 18-week average of closes and going nowhere. You try the upside, you don't follow through. You try the downside, you come back up. It's mishmash. It's not been the place to be, and it still isn't. Could it eventually be? Of course. If inflation bulls come out and decide that this market is the right place, fine. They did it back here. Remember how narrow we got the trading band here. The scale wasn't different. That's what happened. Then you blew out to the upside. You probably have to do more of that congestion trading. When I look at a weekly area chart of closes, how could you be bullish this? maybe if you turn your head upside down and you do it, but I don't see how you can be bullish that. You're under everything. The bias is clearly to the downside. When you look at the weekly chart, you came up here and this was the failure. How do I know? At the beginning of September, I remember telling my traders to buy the gold market. I thought it was going to follow through there. Thought we'd bust through. I was wrong. Out like that, okay? Not this. I promise you, nothing like that. Saw the error of my way, away you go. The market was a total failure. And I came on every day for those of you that watch, and I said, what a terrible disappointment gold is. Not because I made a bad trade. The chart action turned disgusting. And yet we got these inflation calls. Where was the energy market at that time? Wasn't at $80, but it was going higher. Everything was moving up. So now when you come to the weekly chart, you got a higher high, you got a lower low, you're in the middle of no man's land. You keep fighting a battle between the 100-day average and the 18-day, the 100-week average and the 18-week average of closes. It's a weekly chart. Many analysts will tell you, don't buy the second test of a 100-week or a 100-day average. Unfortunately, I'm not in their camp. It's a support number. You don't always go back to these other numbers. You're looking for what some traders might want to hang their hat on. There is no trend here. More times than not, what I believe in is the Bollinger Band. Why? Because the math of how the algorithm is built doesn't require your opinion. It's going to trade within those bands 95% of the time, and if you're bearish and you don't come out of the band, and if you're bullish and you don't, shame on you. Yes, 5% of the time, it'll get through it and run a little bit. 5%. I want to be the casino. I know I'm going to beat you 95% of the time is what the algorithm, not Ira Epstein, is saying. It's going to pull back in, and that's the key here. So I can make an argument and see that maybe we overdid it this week. We got within $2 of that low, and we want to get a bounce. Okay, but I don't see anything bullish on the chart. When I next step to the momentum's neither bullish nor bearish. It's just sort of drifting along, and that's what's happening to people that are trading in gold. It's drifting along, but just enough to make it so uncomfortable you can't hold on to your positions, bullish or bearish. The gold-silver ratio, still climbing in favor of gold. When this is over, when the market is over and prices like that over, the 18-week moving average of closes means you need more silver to get that ounce of gold. And that's how many ounces you would need to get it along the way. When you look at silver, ta-da, why are you hanging short anymore? The market fell back again, this time to the 100-week average and the Bollinger Band. Yeah, it snuck through a little bit lower, so what? It held. Now you have an outside week up. What about embedding? It takes 3 weeks having both numbers that make up the slow stochastic of under 20. You don't have it. You have 2. So what I think is happening is unless you get underneath this week's low pretty fast over the next 2 weeks, the market is saying it wants to make a run, and it might be ready to run back up into wherever that 18-week average of closes is. It is not a buy signal. It is a signal to no longer be short. Do we understand that? This is definitely not a buy. It's a signal not to be short. I then go over to the copper market. Copper keeps holding the lower Bollinger Band. We know why it's going down. We understand supply chain issues. We understand the cost of energy now. And we understand that China is out of energy. They're the largest consumer in the world of copper. They consume half of it. And they're the problem if their factories have to shut down. Do you honestly think we don't want all the refrigerators that have been ordered? Try to order one, see what you're going to wait. I know, I've been going through it, all right? Little ones for my bar area. But go to a bigger item. It's the same thing. If it's in stock, great. If it isn't, you got a real problem because you don't get them quick enough. I'm just giving you that part of a durable good. I can go on and on. Auto manufacturers, and they're going to be using this. Do you honestly think without semiconductors, their situation's going to get better? Come on, get real. A semiconductor doesn't care if the car is electric or regular motor, diesel, gasoline. It needs that. you've got problems. And I'm reading more and more that next year, for the first half of the year, the situation is not going to get that much better. In the platinum, you hit the lower Bollinger Band. Why would anybody continue to hang into the short side? And you lost the downside momentum. Look, here's a market. Both numbers under 20, didn't stay there. Started the correction when you hit that. And this is what happens. You get your bounce out of it. It is a reason to no longer be short, but not a reason to go long. That's what you're fighting in the metals. There are reasons to not be short, but you don't have the reasons to go long. That is the big battle. In the dollar index, you're into key resistance. This is your first test of the 100-week average since back here, last year in the June-July period, okay? The first test often gets thrown back, but if you can plow through it, then you got to see where the other key numbers are and where the other averages are. That combination is often a pretty good wall. You don't break through that wall, 1, 2, 3. There's my news. So you put it together. Those are the game plans that you come up with, but I have the best plan in the world for you. We're covering the weekly here. Can you imagine when I do this on Saturday mornings is when I typically cover for my subscribers. And I'm going to go through 40 futures charts, weeklies, 40 ETFs, weeklies. I'm giving them the long-term pattern. And there's plenty of buy and sell signals off of those. I throw in more indicators. You're not getting the window envelopes here. I intentionally don't show you all the moving averages. I know a lot of you question, why are my slow stochastic numbers different than the ones you're getting? Because I altered the indicator with the developer, George Linn, who developed that. I showed him what I had come up with. He loved it. Imagine when I showed him what embedded is, because he hadn't seen that. And unfortunately, he's gone. Otherwise, I'd have him on for interviews with me. But use all this. You try to play it. I used to, by the way, have John Bollinger. I don't know if you're aware of that, on my TV shows. So I know John, I used to have a show called Stocks, Options, and Futures before it became CNBC. It was the Financial News Network. And I would say I probably had the most popular independent show there. At 1 o'clock Wednesdays, I remember it. We had phone banks of people. People would call in for the free offerings that we were getting. Couldn't have enough there. It was crazy what was going on. And I was probably one of the largest advertiser owners. Then they got smart. They went to the BMWs and all for name brand recognition rather than people like me. I became an old timer, so I have to redo it on the internet. We're doing okay. It's just, if you can't eat a blueberry pie, eat an apple pie. It's not that hard. If you want to find out more about the research, just go to our website. Under the word research, all of our programs are there, along with education, if you go there at the same time on the education slot. I'm Ira. You have a great weekend. Woof. I'll see you come Monday.